Today we're going to talk about quarterly taxes. This is a pitfall that many business owners fall into when they're first starting out. We're going to talk about what they are, who needs to file, when to file, and how to pay. Let's get straight into the video. What are quarterly taxes? Quarterly taxes are estimated taxes that you pay throughout the year on income where taxes were not automatically withheld. This can include interest income, dividends, alimony, rent, gains on the sale of assets, prizes, and rewards. But however, this primarily applies to self-employment and business income. When you own a business that produces income, you are responsible for paying your own taxes. That income tax, federal and state, you handle that. Self-employment tax, Social Security tax, Medicare tax, that is all handled by you. Traditionally, this is done by your employer because they will withhold taxes from your paychecks. But when you are in business for yourself, you are essentially the employer and the employee. So you must file the quarterly taxes with the IRS yourself. So who does and doesn't need to pay quarterly taxes? Well, you must file quarterly taxes if all of the following is true. Income without federal taxes automatically being withheld. This is what normally happens with a W-2 job. Next, you expect to owe more than $1,000 in taxes when your end of year return is filed. Also, you may need to file if you owe quarterly taxes from the previous year. All three, you must file. On the other hand, there are some instances where you don't need to file quarterly tax payments. One, you had no tax liability in the previous year, and this means zero total tax, zero. You were a U.S. citizen, a resident alien for all of the prior year. And your prior year tax covered a 12-month period, so you wasn't short at all on paying your taxes in the prior year. If you have all three, then you can avoid filing quarterly. If you're not sure if you are required to file estimated taxes, it is best to consult with a tax professional to assess your eligibility and requirements. That's why today's video sponsor is Forbes Accounting and Tax. They are a fractional CFO and tax advisory firm that specifically works with digital entrepreneurs and online business owners to translate what their numbers are trying to tell them so they can use that financial clarity to increase profits, reduce taxes, and collect more cash. So I'll drop a link into the description. So if you're looking to have help on your business taxes or your finances for bookkeeping, accounting, or helping to understand your numbers, check them out for their services. Now, when are quarterly tax payments due and how do you calculate them? Well, there are 4 payment periods. Now, most people think quarterly means they're evenly spread out 3 months, 3 months, 3 months, but that is not the case. There's 4 payments, but Q2 and Q4 is not 3 months like the others. So Q1 is income earned from January 1st to March 31st. Q2 is income from April 1st to May 31st. Q3, June 1st to August 31st. And Q4 is September 1st through the end of the year. The general rule is due dates are the following month's 15th after the period ends. So in this case, for Q1, the period ends on March 31st. So the due date for quarter 1 taxes will be April 15th. As for Q2, the due date for Q2 taxes will be June 15th, and so on and so forth. Now, if the date for the due date falls on a weekend or holiday, the deadline is the next business day. Now, how do you calculate the amount of taxes that's due? Well, there's a series of things you have to do. 4 steps. Number 1, gather all necessary documents related to income during that tax period. Number 2, total all of the income. Do not include any income where taxes are being withheld because you do not want to double count the income. Next, you will subtract any deductions in that period. So this is like retirement contributions, things of that nature. Subtracting the deductions will give you the taxable income for the period. After that, you will multiply your taxable income by your tax rate. You can use IRS Form 1040-ES for assistance on how to calculate the liability. You will need to do this every quarter because your income can fluctuate between tax quarters. Rule of thumb, and this is very important, in the event that you are cash strapped and you cannot pay the full estimated payment, it is better to pay something than paying nothing. This is very important. Now let's talk about what happens if you miss a quarterly estimated payment, right? So if you do not pay enough tax throughout the year, you may be charged a penalty, even if you missed a payment or not. The general rule, 90% of any tax liability must be paid throughout the year with withholding or by you making timely quarterly estimated payments. If not, expect some penalties. This rule applies even if a refund is expected when your return is filed in the following year. So the requirement to submit quarterly payments is based on the tax from prior year. So if you expect to get a tax refund next year based on your income for current year, you still may be assessed a penalty because your requirement to pay was based on prior year tax, not current year. So that's very important to know. Now, the penalty calculation is based on the amount of tax you owe and the amount of time it's unpaid. The longer you go without paying, the higher the penalty will be. This is why it's very important that if you cannot pay the full bill, pay something, because at least that will reduce the amount due, which furthermore will reduce any penalties that's associated with that unpaid balance. Now, the IRS typically charges 0.5% on the total amount due as soon as you are late. Each month that payment is not received, the penalty increases up to a maximum penalty of 25%. So this is why I say this is a trap. When you miss payments, out of sight, out of mind, you're not aware that the clock is still ticking. The penalty is still increasing. And then 6 months, 12 months later, you're surprised when you get a tax bill in the mail. So it is best to make sure that your estimated payments are made on time in order to reduce the risk of annual penalties. If you realize that you have missed a quarterly payment, make the payment as soon as possible and submit any related tax forms to the IRS. Now let's talk about how you can file your quarterly taxes. The process for filing is pretty similar to filing your end of the year tax return. First, you will calculate the tax owed for the quarterly period, which we covered earlier in the video. You will fill out IRS Form 1040-ES, and then you will submit that form to the IRS and make your payment. Make sure you keep a copy of the form and payment for your records. The last thing you want to deal with is there's a mix-up with the IRS and they're claiming you never made a payment. Keep your records so that you have that confirmation. Now, to pay your quarterly taxes, there's multiple payment options you can use to submit the taxes. You can do it online through the federal tax payment system. You can do it by mail. If you do it by mail, I recommend you send certified mail so you can get confirmation that it reached its destination. You also can pay the taxes by phone. However, you still would need to submit a form because over the phone, you only can give your banking information to pay the bill. You can pay with the IRS app, IRS To Go, or you can pay by wire transfer. Paying your quarterly taxes can seem daunting. However, it is very important for you to stay up to date and current on your taxes. This is a pitfall, a trap that many business owners fall into, and the more you stay up on it, the more you can reduce any penalties. Check out today's video sponsor for any help on your business taxes and finances. The link will be in the description. Otherwise, watch this video where I show you how to DIY bookkeeping. Yes, do it yourself bookkeeping without QuickBooks or Xero if you're just starting out in business.